Well, guys, we have had a very eventful, last day since the last video I made. If you've been following along, you've been seeing that I've been calling for lower prices, and I know you've been following along because the last video seemed to get a lot of views, so that's pretty cool. But I need to tell you about the levels that are coming up, guys, because it's important, and I did warn everyone, and I did say that a lot of traders would be taking longs, and they would get stopped out, which is what we saw, okay? So if you want to lose any more money, and understand what's happening, I advise you to listen to what I'm going to say today, okay? So we're going to be going everything running from the order flow to the trade setups I'm looking at to the main levels that are good for longs and shorts, okay? If you're not doing correct analysis, you're going to lose all your money. All right, so if we jump straight into the charts. All right, so we are on a blank canvas, as we usually start. Now, what I want to show you before we begin is at the time of my last video, we were around here, 107,200. You can see that here, 107,400 when I specifically did the video. I was saying price is going to drop lower. We've seen price drop from there to, how long is that? How much is that? So that's like another 3.3%. So if you're in leverage positions, that's pretty significant if you're obviously getting squeezed out, right? So let's hear what I was saying. This looks like to me is that price will come out and take these lows out, because usually when you have that formation at a low, it means a lot of people are going long. Now that doesn't mean we can't have a rise up into this region approximately in reverse. However, the higher likelihood says we're going down to take out higher liquidity pivots, because you get the point, guys. So we're obviously going down to take out high liquidity pivots, as I spoke about, because it made sense, right? When you really look at this from an objective viewpoint. Well, what we saw was first of all the pattern, okay? So we formed a symmetrical triangle as we had the giant drop to the downside, which you'd expect it to range, right? So now we're filling the wick. So we're filling this wick to the downside, which is why I do still expect lower prices to come. And I'll show you exactly where I am going to be looking for a long. That doesn't just mean you blindly take it. You got to look at what's happening with the market and the order flow, because if you just blindly take it, there's a very high chance you're going to lose your money. So I also spoke about this, saying generally these patterns result in significant price movements. Okay, now what we're seeing here is a swing to the downside. Now, what a lot of people would have been thinking is, okay, we're consolidating and we're going to have the next run up for the last leg of the bull run. I do believe that the bull run is still potentially on here. I think we're going to have to claim some significant resistance. And I'll go over to what those resistance levels are specifically in a second. But if we just want to look at this pattern, people are expecting it to go up, and what's it done? It's gone down instead, okay? And the order flow has been telling us that we're going to drop lower. So when we were over in this point, I was saying we're going to drop lower. The order flow is painting that picture. So we're going to jump straight onto it. The time of the video was over here. So we saw 24 million longs into the market, 17 million is long into the market. By the way, this is USD BTC, or BTC USD on the Bybit pair. It does have more significance than the other pairs I've tended to notice. So that's why I'm using it specifically for this. What have we been seeing following that price action? So obviously we had the dunk to the downside with this candle, which was $17 million worth of new shorts. You can see it's very choppy. You had 13 million longs. You had 17 million shorts. You had 17 million longs. Then you had 400,000, very neutral. So a lot of movement in price here. Just swapping hands here. So 17 million exchanged and 17 million gone the other way around too. That's why we then ranged for a bit, right? So what happened here? So we obviously hit those VWAPs at the top here. You can see longs entered. They closed subsequently because open interest decreased. Short entered. So here's some shorts at the top here. And then we had some longs enter the market here. Now those longs looks like they've closed here. So you can see, so you can see here, longs enter the market, open interest, and then subsequently $29 million negative open interest, which means those longs had to close, which means that they're selling the market. And since then, we've just had decreasing open interest going down, which means longs have been closing this way down here. So it is looking a little exhausted, this move to the downside, which means we could probably do something like this, scribble around for a bit and then dunk down a lower again. Just depends what happens with order flow and how people load up their positions based on what happens, right? Obviously now it's very neutral. We don't have a a situation where we've got so many longs that are in the market. Like if you look at this, we're just bleeding out. It's a bleed out because longs are just closing. So it's just bleeding. Now, my base case expectations, we're still going to have a significant bounce. If this is the top of the bull market that's already in at the 6th of October, we're still going to have a significant bounce from these very, very important pivots, which I'll highlight in this video. Okay? So regardless of if it's done or not, there's still very, very good trades to take place. And if it's done, we're going to get a good short in. Okay? So first of all, let's start with the high-term time frame levels. There is nothing important besides this and this in my eyes right now. Also, we do have a liquidity level down here, which we're about to take. Everything inside here is chop. I would not be listening to this because we've already had the short trade at the top, which I was in. Unfortunately, I did close out prematurely. We would have been a very, very profitable trade because it was a $100,000 position. So it would have been, what's that? $10,000, $15,000, etc. Anyway, we obviously took out the highs and now we're retracing back down. One could view this as a range, like I've been saying in this video, or the past videos. Take the high, drop down, up, support, up, break down, retest the resistance, drop down. Which means our objectives are going to be, and I'm going to say that it's going to be this and this level here. 1, 2. Very high. It's really unlikely we're going to stop right here and just catapult up. Locally, we could reverse, but in terms of a very, very major pivot, we're this close to very significant resistance support levels. We're psychologically draining the market. We're going to drop lower, in my opinion. And I've been saying that the past few videos. If we take on the volume level, let's have a look. One thing I was speaking about, which is very, very important, was the fact that we had the anchored VWAP, which was compressing price. I spoke about compression of price. It's like a Bollinger Band. And failing to claim above the POC. Since then, we've had the breakdown, and I spoke about this in the last video too. We were teetering around this level, and we found resistance on the value area low, and we've since dropped, which means our objectives are down lower. So we're heading down lower. I'm just going to keep it plain and simple for you guys, since that's how you want it to be, right? Major range. Like I said, 2 candidates of a significant low. 1, 2. Now, when I say this one specifically, I do expect price, if we do go down here, I expect price to take out the 100, go below 100, freak everyone out, drop below 100, do a little sideways thing and probably run up and just go from there. That's going to be a very, very good long trade. If we move to, swing highs, swing lows, here for the upside, here for the downside. The resting liquidity above this high is probably not going to be that much. This one's okay. This one's solid. This one's better. These ones are very, very good to the downside. There is more magnetism to the downside. Fair value gaps. Yeah, those are your resistance levels. We've got a lot to claim up if we're going to start rocketing from here. Hence, I'm going to put a big fat magnet and say we're heading lower, guys. So that's my take on the market. Literally smash that like button, guys, because I'm going to be updating you what's happening going forward in the market, what I'm doing in my trades, etc, etc. Just get ready though, because we do have this weekly very, very big momentum wave that is probably going to draw out something like this. So maybe somewhere around this neighborhood, we will take out these lows and then have that reversal upside. Then when we get over here, this is the make or break it. We either reverse here or go up and claim above. Or there's a few variations that could happen, but we're going to take it step by step. But if we flat out reject, that's very, very bearish. Looks like a week off distribution if that happens. And say goodbye to the market because the bull market will be over by then. We'll take it step by step. That doesn't mean this market's going to retrace like heavy. I'm also thinking we might have a 50% retracement, then range here, then go up. I don't see Bitcoin just dying unless there's a global fracture that occurs. But for now, we'll take it step by step. All right, guys, do me a favor. Like the video. Also, comment what you think about the market. What do you think I should improve with my videos? What do you also think I should add, etc. Any criticism, I will take it as a data point to improve my content. Other than that, leave a comment, guys. It helps the algorithm out. And let me know your levels of resistance and support you're looking out for. I think it's really straightforward. I'm saying it just requires a lot of emotional control to regulate yourself and not enter a FOMO position where you're going to be instantly underwater, okay? So yeah, there's definitely scalp trades to be taken throughout this whole entire range. But we're not going to be doing scalp trades on this channel. I'm going to be only talking about swing trades. Personally, I do scalp trades, but I'm only going to be talking about swing trades on this channel because that's more user-friendly and retail-friendly, because not many people can afford to be sitting there trading their entire net worth up and down on a 5-minute chart or whatever, right? Anyway, I hope I've highlighted the very important levels here, guys, and I'll catch you in another episode I do, which will be maybe tomorrow or the next day. In the meantime, every month I'm doing a Beyond the Block episode with the guys at Ainsley. It's in the homepage of my channel, which goes over the macro foundations of the market. So if you want to watch that, that gives you a very, very outlined framework on the macro regime, what's happening on that perspective, okay? As you can see here, guys, we're literally dropping in real time. So we're probably going to take these lows out, like I said, right? So take it step by step. Those lows are going to be taken out, in my opinion. If we do rocket from me, I'd be very surprised about taking those lows. So, and that would be me missing a trade. No capital lost. Do you hear that? No capital lost. Anyway, guys, peace out. Catch you later. Like the video up. I'm signing out.